So I'm going to go ahead and introduce our speakers now and get started. So we are thrilled to welcome Jamie Wilkey, partner, and Brad Porter, manager from Lauterbach Amen, to speak with us about fraud awareness and strengthening our internal controls in libraries. So we really want to mention that we're especially grateful that they sponsored this program for us and we were able to offer it for free to all of you. So thank you to Lauterbach Amen, and thank you so much to Jamie and Brad for being here today, offering us your expertise on this issue. We're really happy to dive in and learn more about how we can protect our libraries from these important issues. So I'm going to go ahead and turn it over to both of you.
All right, thank you, Kate, so much. And we certainly appreciate the invite. I think any opportunity to talk about fraud and internal controls for units of government is obviously, from our standpoint, always an important discussion. So we certainly appreciate the invitation. Just a couple of housekeeping items as well as it relates to potentially submitting questions. We will this afternoon be answering questions towards the end, but as you maybe have them, there is the Q&A function towards the bottom of your screen. We would encourage you to submit questions through that format. Brittany will be monitoring those, so there may be times where she may interject in our discussion to help answer some of those questions depending on the time. But certainly we will be opening it up for questions at the very end as well. So my name is Jamie Wilkey. I'm one of the partners here at Lauterbach Amen. I've actually almost been here nearly 20 years, and of those 20 years have spent every single one basically engaged in providing auditing and consulting services to local governments. So many of those clients obviously include our libraries, been working in that library group for many, many years. So certainly this was a welcome opportunity to help provide some education. I also am joined by Brad Porter, who is one of our audit managers. Brad has been with the firm just over 7 years and manages a number of our library engagements. And so obviously he has been working directly in some of the internal control environments that you all have. And he will be taking over kind of the back half of the presentation, talking about some of the top 10 internal controls that really we feel like every organization should have to some extent. So without further ado, we'll go ahead and get started this afternoon. So on our agenda this afternoon, and it is rather full, so we'll try to get through it here in a timely fashion. We want to talk about really, what is fraud? What types of fraud exist out in the local government arena? How does that affect government entities when there is fraud? Really to talk about the role of various participants. So what's the role of staff and management, the auditors, for example, kind of who's responsible for what pieces as it relates to fraud prevention and internal controls. The idea that we have lots of clients who maybe have certain internal controls documented, but challenging our clients to say, are you actually following them in practice? So internal controls really are only as good as those that are followed, regardless of what's documented. We'll talk about some real fraud cases in government. Obviously, we all know the famous Dixon one, but certainly there's some other real world examples that have happened here in Illinois at the local government level. For me as an auditor, I think those are always an opportunity for any of us to analyze and ask the old question, could that happen to us? Or do we have enough controls in place to mitigate, what happened maybe at a neighboring, local entity? So we'll talk about those as well. And then, as I said, we'll kind of shift gears and say, okay, we've talked about the good, the bad, the ugly. How do we build a control environment that helps support sound internal controls and help mitigate that fraud prevention? So that will be the agenda for this afternoon. So as we take a look at fraud itself, there are really 3 predominant types of fraud out there for local governments. The first being asset misappropriation, which the title kind of indicates what that is. This would be where you have employees actually stealing assets of your entity. I think oftentimes people think of cash, but that certainly could be other items such as inventory, Tangible assets, pieces of equipment, computer equipment can very easily grow legs and walk out the door. And so the idea here is they're actually taking something that you own. They may be doing this by perpetrating payment for a fictitious good or service. So they're submitting maybe an invalid vendor invoice for payment. And again, they're stealing your cash asset once that payment is made to a fictitious vendor. And it could also be maybe misusing government resources. The idea here may be payroll fraud, such as, overinflating overtime hours so that an employee is paid more than they actually worked. So this is the first type of fraud. Pretty common we see in government. This is one that typically when you look at the data is definitely towards the top of the list of being perpetrated in government. The second is corruption. I'm sure all of us living here in Illinois can think of many corruption cases over the years. But this is basically where you're using your position or your influence to, influence business decisions directly for your personal benefit, maybe, or maybe someone known to you. Bribery would also fall under this category, as well as any form of abuse of power. And this is one we do still commonly see in government. The third type of fraud then is what we call financial statement misstatement. So really here, it's the idea that there's intentional misstatement of the financial statements, maybe omission of certain information in your notes to the financial statements, for example, that in theory would be critical to someone understanding the financial position of your entity. Sometimes you'll see this as like bolstering the financial statements. We don't see this as often in government because we don't have the same incentives to maybe show profit. But certainly if you were an entity going through like a bond rating or issuing debt, there might be some incentive for, disclosing certain things within the financial statements or inflating revenues or concealing expenses. So those really cover the three primary types of fraud that we see in government. Again, the first two being the most common. And so then we start looking at some of the specific fraud schemes that are out there. So what do auditors tend to see as we start reading these stories? Here are fraud cases. What are the types of cases that employees are able to kind of pull off? So the first is what we call write-offs. And this is the idea where someone on staff has access to both your cash collections and the accounts receivable records. So this is an employee that can basically write off a receivable or issue a refund. And in theory, when they're doing that, they're then pocketing the cash. So that's what we call a write-off scheme. Payroll fraud, certainly another example of schemes we see in government. You could certainly have someone within the payroll function that creates a ghost employee, not accurately maybe reporting time on a timesheet, for example, would be payroll fraud. We talked about the overinflating of overtime. Changing certain benefits or accrual dates. This is actually a specific example we'll talk about a little bit later, and it's one that our firm actually uncovered many years ago. So we'll definitely get into some specific examples. Kiting, this is really where you have fraudulent writing or use of checks. For example, alleging that transactions are in transit maybe with the bank when in reality there's fraud going on. So the idea of kind of manipulating outstanding checks or in transit type of activity through the banking side. Petty cash, and we'll talk a little bit more about this in our top 10 internal controls, but certainly an employee, if you have petty cash at your entity, could in theory provide a fictitious receipt for reimbursement. Credit card and P cards, we'll just say out loud, are probably every auditor's worst nightmare. There seems to be an uptick for sure in this arena as far as employees potentially providing reimbursement for unauthorized transactions. So really, we'll spend some time at the end of the presentation on those top 10 internal controls specifically around credit cards and P cards, as I know those have become a much more common way of making payment. I know they create some nice efficiencies, but we always need to make sure we've got the right controls around those purchases. We then have what we call lapping. Lapping is the idea of robbing Peter to pay Paul. And I've got an example of this one that actually happened in Illinois as well. Typically this happens, usually it's a collection type of position. So what happens is they take in money for payment from customer one, they pocket that, customer two then comes in and pays, they apply customer two's payment, customer one, customer three comes in and pays, they cover the outstanding AR of customer two, and so on and so on. So it's this endless chain of kind of robbing Peter to pay Paul, as they say. Double dipping would be another example of fraud schemes that we have seen and heard about. This is where an employee might submit for a reimbursement through petty cash, and then also submit through some other regular reimbursement process that you all have in place. So in theory, your entity ends up paying for the same thing twice through reimbursement to that employee. And then obviously work travel fraud. This we certainly have heard about in the news as well, asking for reimbursement for maybe meals that they never had. Maybe it was provided through the conference they attended, or inflating expenses, or unauthorized purchases that they then request reimbursement for. So those are really the prominent schemes we see out there at the local government level. But I think it's important to kind of shift gears then and talk about why employees actually commit fraud. Why do we see this as such a hot topic sometimes in the government space? Really you've got to have kind of a three-pronged scenario happening. So, really the employee likely has some personal situation that creates this kind of predisposition or need to potentially perpetrate the fraud. Sometimes you'll see that in the form of addictions such as gambling, drug use, alcohol, etc. Sometimes it's just personal financial stress. They may be going through a divorce or bankruptcy, or dealing with, escalating medical bills. So, they're looking for a means to kind of reduce that stress, right? Maybe feeling a sense of it being owed to them. Sometimes this is like the disgruntled employee idea. Maybe they were somebody passed up for promotion or advancement, and they feel like, this money is owed to them by their employer. The one key to fraud is there has to be opportunity for someone to then commit that fraud, meaning there has to be an environment that allows for the fraud to take place. The idea that maybe there's no established or, monitored internal control structure, they have to be able to actually have that opportunity to commit the fraud. And oftentimes when you read these cases, most employees who commit fraud actually rationalize their behavior. Maybe it's the idea of, I'm going to take a little bit today, but I'll pay it back tomorrow kind of thing. And then you end up down a rabbit hole that ultimately the employee can't, make whole, those acts of incrementally potentially taking money. So as we know in government, many things hit the newspaper. So fraud in government, especially at the local level, really is costly for a number of reasons. Obviously there's the idea that we have potential loss of taxpayer dollars. But the idea that you all as management sit in the public eye, potential fraud cases can go to the newspaper, put in public information, the taxpayer and constituent confidence is just lost. And oftentimes we've seen when there is a fraud case at the local level, there tends to be this little black cloud that hangs around for a while. It's not just the perpetrator who creates this negativity, but the organization itself is almost then looked at in this kind of negative light. So definitely being in the public eye, we have to talk about potential fraud, we have to talk about internal control, and we have to monitor it on an ongoing basis. So how do we mitigate against this potential fraud? You know, we've talked about some of these fraud schemes. We've talked about, you know, the 3 types of fraud. Certainly, I'm sure we can all think of examples that, you know, we know of out there where, you know, some entity has gone through some level of fraud. So how do we mitigate against that? And the real answer is creating a sound internal control environment. And so we want to shift gears here now for a few minutes and really kind of chat about that overall control environment. And really, that is made up of 3 key items. First being policies, second being procedures, and third being your actual practices. And when we have a sound combination of these 3 items, most auditors will be really happy coming in because that has the potential for being a really strong internal control environment. So when we talk about policies related to internal control, we tend to view those as almost personnel related policies. So policies around employee conduct or behavior, other board, you know, approved of policies, policies related to actual internal controls. So this might be like a credit card use policy. We then have the procedures, right? So these are really the internal steps that your employees take to basically do their job. And we always encourage that those specific procedures be documented, be trained on, and certainly be followed in practice. The last item is practices. So these tend to be things that are less formally documented, such as things like tone at the top. What is the board's expectation as it relates to ethical behavior by employees? Is that expectation communicated on a regular basis? You know, what are the expectations of overall job functions and duties? And, you know, maybe board and management's expectations towards sound internal controls. So again, those tend to be less documented items, but more kind of that feeling or tone at the top or setting of expectations as it relates to your internal control environment. So again, the combination of those good sound policies, procedures, and practices, quite frankly, help you as management create almost an internal insurance policy. It helps you reduce the risk of errors, material misstatements, and fraud. When we can have those 3 things working together, again, your auditor is going to be happy that you've got a nice, sound internal control environment. At a bare minimum, there's a few things that we auditors look towards with regards to a good internal control environment. One of which, and it's a big one, segregation of duties. You know, we have to make sure that no single person is ever in a position to commit any irregularities and then be able to conceal what they're doing. So for example, we should never have the same employee who's collecting cash, making deposits, and then performing the bank reconciliation, because they then have the opportunity to basically conceal some type of fraud. Number 2 is security over your assets, making sure that all employees have an obligation to provide security over your assets and records. I know Kate mentioned the cybersecurity training coming up. This has been a very hot topic. We are obviously not covering it this afternoon, and it certainly warrants its own session for sure. But you know, security of your records and access to those records really do become an employee's obligation as well. And then proper authorizations and approvals. So, you know, who is approving timesheets? Who's approving certain vendor payments based on dollar threshold? You know, are those procedures documented and are they being followed in practice? So those are some of the big 3 kind of high level, you know, what do the auditors expect at a bare minimum to see? So as we drill down into policies, I want to provide you all with some recommended policies or best practices. And again, as I chatted, many of these are related to employees and their conduct within, you know, their employment with your entity. So what we would recommend if you don't have already, and certainly we have our contact information at the end of this presentation and can provide some examples for anybody who is interested. Really, you should have a formal ethics policy. This may be part of your personnel manual, but really making sure that there is a policy that outlines what your expectations are of how employees conduct themselves on the job. Whistleblower policy, this is really important. Oftentimes fraud is found, or even lack of internal controls. Maybe you haven't had fraud yet, but the idea that an employee can kind of sense or sees a red flag of an area of weakness, certainly having a whistleblower policy is important. It's the idea here that you're asking employees to promptly report any concerning behaviors or issues. It provides a chain of recommended communication when those things are identified, depending on the nature of what they have found. And it ensures that claims are handled by your organization with care and confidentiality. So it really is to protect the employee, give them security that, yes, we want you to come forth with any of those things that you think are out of the ordinary, red flags, behavior of another employee that you've observed, and make sure that they feel protected in having that conversation. A security and keys policy, this goes hand in hand with some of the cybersecurity discussions that I'm sure will be covered in that later April session, but under here would be, password policies and securing passwords, restricting access over certain properties, records, computer information, access to the cash drawer, those types of things. And your policies, in theory, should also outline disciplinary action. So if an employee doesn't follow what's mandated in the policy, what is the employer's recourse in that regard? So we want to shift gears a little bit again and talk about all the people who are kind of involved in your control environment and then what their responsibilities are. So, first off is management of the organization. And so when we talk about management's role in the internal control environment, what I can tell you is you are really the first responsible party for internal controls. You are, responsible basically for establishing a sound internal control environment, continually assessing any potential risks that your organization may have, establishing and maintaining those control policies and procedures, communicating those internal control expectations. And I think the one that often gets left off the list is continuing to monitor then going forward. So really looking at what the effectiveness is of your internal control environment. The governing board for any organization is really that final responsible party, right? They need to make sure that management is meeting those internal control environment expectations. And they really have that kind of final and ultimate responsibility for that. I oftentimes get asked, and I attend a lot of board meetings each year, what the auditor's role in internal controls is. And I think this is definitely a misconception in our industry. When we come in to conduct your financial statement audit, our job is not to find fraud. What you all hire the auditor to do is come in and analyze the books and make sure that what is being presented in your final audit report is materially correct information. As part of that, we are certainly required to assess the control environment. But if you carefully read your audit opinion, you'll see that we are actually not providing an opinion on your actual internal control environment. Now, certainly if there were any red flags, issues, findings during our testing, we are required under professional standards to make sure that that information is communicated to the appropriate level of management or the board. But again, I want to reiterate that the auditor's job is not to establish internal controls, it's not to monitor those internal controls, and it's not to find fraud. So really that responsibility lies with management and the board as a kind of cohesive group. So I know there's lots of kind of stories out there of local government fraud, and what I wanted to do is cover some of the ones that we are aware of. This doesn't mean that they happened at our clients where we were the auditors, so we'll just make that little caveat here. But ones that we've heard through the grapevine, a couple of these we've actually found in a first-year audit that we've conducted as we've gone through and done our internal control assessment. So some of these actually came about as part of our testing related to that first-year audit. So some of them are very simple, small dollars. We're not talking about, the Rita Crundwells of the world, and we'll certainly get to that one last. We always save that one for last, but some of these are very small schemes, and ultimately some of those dollars can start to add up depending on how long the employee is able to kind of perpetrate that fraud. So the first one I want to talk about, and I didn't want to put any of these in writing for obvious reasons, and I'm going to leave names of Illinois entities out, but the first one was a lapping scheme. We talked about lapping, which is that, robbing Peter to pay Paul kind of concept. And we actually had a first-year audit client where we were doing some testing around receivables, and started to notice some inconsistencies. And so what was happening is the clerk was basically pocketing payments from customers, and then also able to basically manipulate their accounts receivable balance, showing refund. So in theory, they would have never been required to make that payment. And again, pocketing the payment that came in. The second one related to actually a director several years back who had access to the payroll system and was actually able to go in and change his salary amount. And so the board in that case was still getting payroll, detailed payroll reports each pay period, but I'm not sure anyone recalculated then what the annual pay was. They were really just seeing those individual, payrolls for each pay cycle. But ultimately he was able to inflate director salary amounts. Also with that one, I know there were some personal charges to the entity's credit card, which again, as we said, the credit card schemes that are out there are happening more and more frequently. It's definitely an area, if you leave the presentation today, I would encourage you to really kind of start taking a look at your credit card policies, P card policies, who has credit cards and why do they need them, that kind of thing. We've come across another case where we had a department head level individual that was actually, quote, borrowing equipment from the entity as well as borrowing staff time or labor, and actually constructed a pond in the backyard of his personal residence, and then had the vendor under that scenario basically bill the entity for the entire cost, and so basically for his own personal benefit. Another story of one of our first year audits, this was several years back. We actually came in to do our internal control testing for payroll. And one of our tests is actually to request original signed applications from a hire, from an employee, and match certain dates within those files. So one of the items that we match is hire date. And what we noted was that the payroll records seemed to have a different hire date than what the application showed. And so we started doing a little further digging into the software system, and we're able to identify that the individual actually went in because they had access to the payroll system, and at some point years prior had actually changed their hire date. And they did it so that they could actually accrue more PTO time. So it gave them additional tenure, which allowed them to take 2 extra days of PTO every year. So that one was identified, through the basic test of just comparing payroll records with hire dates to, personnel files. Another one that we've seen out there pretty commonly is the idea of ghost employees. So anybody who has access to the payroll system creates a ghost employee. Oftentimes the red flag here is having an employee on payroll that has very little voluntary deductions. So typically you'll see just taxes taken out, but no other elections, because obviously the perpetrator is trying to, make sure they're getting the full amount of that employee's net, that ghost employee's net pay. We do have clients periodically who do a little internal audit on this concept. And so what you can simply do is not issue direct deposits, but have to issue manual checks and actually require employees to pick up their check with an ID. And what this does is basically verify that anyone on payroll is an actual employee. They have to at some point show up in person and collect that check. So that's kind of an internal function. I know it's probably more difficult in current times, but I know we've had employees who every so often have done that. I do want to bring up the credit card and P card fraud. It is happening way more than I would like to see. We certainly recommend to clients really take a look at who has credit card authority, what dollar amount. You should have a sound policy in place that anybody who's issued a credit card has to sign off on what the controls are around the use of that credit card. Original receipts from employees should always be required. If an employee cannot provide a receipt for their purchase, you really should not be reimbursing them. So this is definitely an area where we're seeing a lot more fraud. Sometimes it's hard, even on an original invoice, to kind of distinguish what was purchased and how to validate that it was for actual business use versus, personal use. So really be careful with the credit card and P cards that are issued in your local entity. And then the last famous one that obviously we all know about is the Dixon case with Rita Crunwell. Most of you know she was able to steal over $54 million over a 22-year period. And what I will tell you in many of these cases, if you read the documentation, a lot of this relates back to employees who are trusted in the organization. Rita was a perfect example. She had been with Dixon for decades. She was always helpful to other people. She could always be trusted. She would never take vacation because she didn't want anybody else to have to do her job. But, we really have to be skeptical sometimes of, employees, and it sounds terrible, but really as management, your job is to, make sure that you're trusting the internal controls and you're not trusting employees, if that makes sense. So really making sure that you can rely on those internal controls and you're not necessarily relying upon, just an employee. So I know with many of our libraries, you guys have smaller operations. Brad's gonna kind of talk about some of the ways to bolster your internal controls. And obviously we acknowledge that that's much more difficult at some of these smaller entities. But I think there's some creative ways that you all can kind of work around some of those controls and still be able to have a sound and very tight internal control environment. So I'm going to shift gears and turn things over to Brad. What we want to do now is give you some resources as you head back looking at internal controls in your own entity and really cover what we feel are those top 10 internal controls really for any governmental entity. This list, I can tell you, I have spoken about 10, 15 years ago. It still holds true today. And I think there's some really important ones in here that really will help to bolster your overall internal control environment. So Brad, I welcome you to join in, and I will run your slides for you here just for ease of transition.
Sounds great. Thanks, Jamie. Good afternoon, everybody. My name is Brad Porter. I'm one of our audit managers here at Lauterbach Amen, who just so happens to oversee a lot of our library audit processes. I too am very thankful for the opportunity to present here this afternoon. I know in looking at the participants, I see a lot of familiar names, so it's great to have the opportunity to interact with all of you again. So yeah, now that Jamie has covered the different types of fraud that can negatively impact your library, I think it's important that we ask ourselves, what types of controls can we implement to reduce the risks of fraud to an acceptable level? So here I will be reviewing the top 10 controls that we recommend governmental entities have in place. Starting with number 10, avoiding or discouraging related party transactions. I think a related party transaction can best be defined using the term direct or indirect interest. So these can be both financial or non-financial in nature. You can have certain agreements that aren't necessarily financial in nature that can negatively impact your library. So we use a term in the accounting world, arm's length. So it's very important that you're maintaining arm's length transactions in all of your business dealings. Some of the mitigating controls to avoid related party transactions, first and foremost, requiring a competitive bidding process for contractual agreements. Secondly, discouraging the hiring of relatives in business transactions involving board members and employees. Moving on to number 9. Number 9 is to protect cash and check collections. As one would expect, cash is most certainly the area that is most susceptible to fraud in our industry. So it's very important that we're implementing procedures to protect our cash and check amounts. How can we protect our cash and check collections? Well, first, daily reconciliations of cash and checks. I wish I could underline daily there because oftentimes we have clients that are reconciling them on a weekly or even monthly basis. And that's oftentimes an auditor's worst nightmare as well. So the longer time period between your cash collection and reconciliation processes, the more you're really opening yourselves up for the potential risks of fraud. Kind of in the same breath, timely bank deposits. We know the level of cash receipts for libraries, you may deem them immaterial each day and that daily deposits may be inappropriate. But ultimately, we should never go more than a couple of days without making bank deposits. In addition, we would encourage centralizing cash receipts whenever possible and performing unannounced cash counts. I think this is where you as management can get involved and perform kind of a secondary level review at your own choice. Moving on to number 8. Protecting checks against fraudulent use. People, as we know, can get quite creative when it comes to check fraud, as I'm sure many of you have been a victim of this in the past. So it's very critical that we're storing blank checks in a locked drawer or cabinet, ultimately limiting access to those checks. It's important that we're requiring dual signatures on checks and marking invoices paid with the related check number when these checks are issued. All in all, I feel like most of our libraries that we audit do have great controls in place over their AP process, but nonetheless, we can't stress enough that you can never have too many levels of review when it comes to checks and electronic payments. I do think this is a great opportunity to encourage the use of electronic payments. I know we're seeing more and more clients transition into this electronic digital world. I know that does pose a separate set of risks, and I think that's probably a conversation for another day, as we could probably speak an hour on that itself, but it certainly does reduce your overall risks of fraud to your organization by digitizing your electronic payment methods. Number 7, protecting petty cash and other cash funds. So petty cash is another area that is incredibly susceptible to fraud. So it's important that petty cash is kept under lock and key. For any disbursements that are made out of petty cash, it's essential that the library is requiring original receipts for these transactions, and that petty cash is always reconciled prior to replenishment. In short, I think we recommend as your auditors to keep that petty cash balance as minimalistic as possible. Moving on to number 6. Ensuring that the entity's assets are only used for official business purposes. This is one that I think may seem like common sense, but lackluster review of employee expense forms, credit card statements, et cetera, can create some major risks for entities on this front. We encourage the following as mitigating controls to help keep your library assets safe. Close examination of expense reports and credit card statements, ensuring that this is done on a monthly basis and that all transactions are deemed legitimate. Maintaining vehicle logs for any employer-provided vehicles, and maintaining a detailed listing of all library equipment, periodically completing an inventory count to ensure that that listing is accurate, that there was no physical theft of any of the library's assets, so on and so forth. Moving on to number 5, prepare all fiscal policies and procedures in writing and obtain board approval. Again, I think this control is rather self-explanatory, but that certainly does not discount just how important this really is. Jamie had discussed a little bit prior in the presentation about the specific policies that we look for during an audit process. And seconding what she had mentioned, we'd be happy to provide some sample policies if your organization is interested in implementing one of those. If you saw one on the list that you said, our library doesn't necessarily have one of those, first and foremost, that's okay. That's the role of our auditors, is to aid you in a lot of the best practices policies that we see in the industry. So please feel free to reach out to Jamie or I, and we'd be happy to send over some sample policies. Again, in the same breath, simply having these policies in place doesn't necessarily mean much if the policies aren't being followed. So it's critical that you as management are performing periodic reviews of these policies to ensure that everything within is still applicable to your organization and that there are no updates that need to be brought to the board for approval. Number 4, providing board oversight of management and government operations. Jamie used the term top-down approach earlier, and I think it's very applicable in this spirit. With that in mind, it's very important that the board monitor financial activity. That can include monthly review of the treasurer's reports, investigating any budgetary differences, and periodically making inquiries of finance personnel. Hey, why are we over budget here? Why are we under budget here? What are we paying this vendor for? Simple questions like that can go a long way in reducing your risks of fraud. We also encourage having your audits presented to the board on an annual basis. I know we perform that for a number of our library clients, but it does allow the board to see things kind of in a different light, per se. So it is something that we would encourage every library implement.
Hey, Brad, if you don't mind me interrupting for just one moment, we had a question that I feel like might be good to answer it in a timely manner while we're talking about the controls. And the question is, how do electronic payments work when board oversight or approval is needed for invoice payment?
So oftentimes our clients, really backing up, it doesn't necessarily change the level of reviews that need to happen. The same number of reviews need to be happening over these electronic payments as they were had it been made via paper check. So one way of a lot of our clients do this is they print at the end of the month a list of all electronic payments that also goes to the board with their monthly board packet. So that's certainly one level of approval that can happen. Jamie, I'm not sure if you had anything that you wanted to add.
No, I think you're exactly right, Brad. I think typically we'll see still those electronic payments going to the board. It may not look like your typical, invoice listing that you have in your board packet for approval, but a separate kind of either electronic funds or ACH type of listing of those transactions with the same level of detail. Who's the vendor, when was it paid, what was the dollar amount, what expense account was it charged to, so that the board has the opportunity to still ask those questions and provide formal approval for those transactions. So I agree with you, Brad. The internal control concept really doesn't change regardless of how you're making that payment.
It is very important too that the board take a look at your purchasing policy, because when those purchasing policies were implemented, electronic payments may not have been a real thing at that point. So it is important that you break it down. If you want to establish different thresholds for electronic payments as opposed to your AP payments, then sitting down and assessing your purchasing policy will allow you the opportunity to do that. All right, moving on to number 3, restricting the use of credit cards and P cards, as well as verifying the legitimacy of the charges themselves. I know Jamie has touched on this a little bit previously, but I wanted to point out a couple of specific controls that can reduce your risks of fraud related to employee credit card use. All in all, we recommend as auditors to limit the number of cards to only those who management deems absolutely necessary. The more cards that you have out there, the more you're opening yourself up to fictitious charges, so on and so forth. So really limiting them to only those who you deem necessary. We also recommend requiring original itemized receipts for all charges that are made, and requiring employee sign-offs on the library's formal credit card policy. Some of our clients will have an annual notice go out that they require any cardholder to sign, stating that they've read the policy and that they're understanding of what their due diligence is as a cardholder. All right, next slide, please, Jamie. Number 2, monthly reconciliation of bank accounts. Again, it is the auditor's worst nightmare when we come in and we hear, oh, our bank accounts aren't reconciled. We're certainly understanding that things happen, and oftentimes some uncontrollable circumstances arise, but nonetheless, it's incredibly important that your accounts are being reconciled while things are still fresh, which ultimately is on a monthly basis. It's very hard to go back in time stating, what was this transaction for, or why did this occur? So reconciling things on a monthly basis, things are still fresh and much more streamlined. The reconciliation process should ultimately be performed by a person who does not have bookkeeping responsibilities or check signing responsibilities. And again, we understand that our audience here today is libraries who don't necessarily have a fully staffed finance department like a lot of our municipality clients do. So Jamie had encouraged the term getting creative, not creative in the sense of let's see if we can pass things by our auditors and see if it's okay, but ultimately adding an additional level of review into the mix, whether that's by the board treasurer or board member, and really placing an emphasis on the segregation of duties, which we will address here shortly. During the reconciliation process, examinations of canceled checks should be performed to ensure that all charges are for business activity. And auditors do like to see initial prepared and initial reviewer on the bank reconciliations to show that that bank reconciliation was prepared and reviewed by 2 separate parties. And now the moment you've all been waiting for, number 1, segregation of duties. Certainly the most important mitigating control in terms of reducing your risks. The majority of fraud cases do occur because of a lapse in segregation of duties. So it's very important to separate some of those critical job roles of receiving and depositing, recording transactions and reconciling accounts, and check authorization and check signing. It's also very important that supervisors are reviewing and approving timesheets prior to payroll being processed. Jamie had talked through a number of different payroll schemes. It's not just AP or cash receipting that's at risk. Payroll is a big area in terms of fraud. So it's very, very important that supervisors are reviewing timesheets prior to the payroll being processed. As I had mentioned, your libraries are certainly understanding that libraries have smaller finance teams, and this may seem impossible at times. So certainly encourage you to involve the board where you see best fit. Another recommendation that we have is to require members of the accounting and finance teams to periodically take vacations. This may seem silly, but when another individual has to do their job, it oftentimes will provide that second level of reassurance that things are being done appropriately and smoothly. So in the instance of Dixon, that's actually how the fraud was uncovered. They had another individual filling in the job responsibilities, and at that point said, what is this bank account that we have on the books? So, all right, that concludes our presentation. So I know Jamie and I would be happy to open up the floor to any questions.
Yes, and just as a reminder, if you have questions, we can certainly respond to those within the Q&A function. We have provided our contact information. I know we work with many of you on the call, but certainly happy to assist with anybody who was able to join us today. whether there's follow-up questions, if anyone would like to see some of the sample policies that we discussed, whether the personnel policies, we have sample credit card, P card policies. So anything with regards to that, we would by all means be happy to assist. And certainly want to thank you all for taking the time, with us this afternoon. It looks like we hit just under the 1 hour mark. So I think it was successful timing here. You all just under that hour. I'm not seeing any additional questions coming in. So I do hope you all found this beneficial. Hopefully there's we've got one here. So we have an anonymous question asking, who do you recommend to be signers on checks if you need to? So I'll kind of answer first, and then maybe Brad, if you've seen some other samples. I think for many of our libraries, typically it may be director and then board treasurer seems to be a common one that we see. So I don't know, Brad, if you see other kind of two-person scenarios, but that seems to be the most common.
Yeah, that's absolutely the most common arrangement that we see.
Great. We've got another question coming in, and I apologize. We should have given the acronym P card stands for procurement card. So these are slightly different than credit cards. Typically, the P cards are issued by the company holding that card. So Home Depot, Menards, those are some popular ones that we see out there in the government space, maybe somewhere where you buy supplies from, for example. So not necessarily always like a Chase credit card, but the actual business then issuing that procurement card. But we need to treat those in the same way we treat credit cards. You really should be minimizing the dollar amount that any one person can charge, making sure you're requiring original receipts. The same policies and procedures really hold true with the P card scenario as well. Okay, I think, I know we had a question about the cybersecurity training that's coming up. Just a reminder, that is April 29th. Within the chat, it looks like Brittany provided that information. So that was also one of the questions asked. And certainly from an auditor's perspective, I would encourage you all to attend that. And I know they have some great panelists with expertise in that area. Certainly it could be a whole nother several hour, session about what's happening in the world today with regards to cybersecurity and keeping your network safe. So certainly we would encourage you to attend that session as well. All right, Brittany and Kate, it looks like we're through questions, and certainly want to thank you both again for inviting us this afternoon, and certainly thank everyone for attending.